Welcome to the Big Picture Retirement Show, where you'll learn what it really takes to have a successful retirement. With over 20 years of experience, your host, Rick Rivera of Safeguard Investment Advisory Group, has seen it all and is here to help you achieve your retirement dreams. This is the Big Picture Retirement Show.
Welcome into the Big Picture Retirement Show with Rick Rivera. Rick is a partner at Safeguard Investment Advisory Group, has over 20 years of experience in the financial industry. Now, Safeguard Investment Advisory Group is here to help you figure out where you are on that road to retirement. Can I retire? Well, when can I retire? Do I have enough? Will my money last? As long as I do, as long as we do, right? There's a lot of moving parts when you get to the distribution phase. You had the accumulation phase, your working years, now retirement distribution phase. Are we on the right track? Are we doing the right things? Don't even know. Well, hopefully you do know. You can find out more about Rick and the team by going to the website safeguardinvestment.com, safeguardinvestment.com. And, of course, if you have questions about any of this, you can always give them a holler. 800-700-1980, 800-700-1980. I'm Mark Elliott. Glad you're with us today. Rick, you ready to go?
Yeah, absolutely, Mark. What do you got for me today?
All right. Well, think about this. We all have some bad habits, probably. A few. Maybe one. Might be more, right? But
it depends on who you're talking to.
The point of this is, though, obviously any time is a good time to break a bad habit. So whether you want to make improvements in your routine at home, your job performance at work, with your physical health or your financial health, the time to make a positive change for your future, it's right now. That's how it works. So, Rick, here's a stat that's kind of, you're not going to be surprised by it at all, I think, but only 33% of Americans have a written financial plan. So most of us are kind of winging it when it comes to our spending. How in the world can we break the bad habit of living without a budget?
That's a very good question. You're asking me to be a psychologist now, Mark. At the end of the day, a lot of this is all going to boil down to education, and a lot of people already know they don't have a written plan. There's a lot of things that that they should have written plans on, but at the end of the day, if we want to succeed at anything, we have to have some sort of guide, some sort of a goal to strive for, and we have to understand that we have to make certain sacrifices in order to make these things happen. And without a written plan for your retirement planning or investment planning or anything else, you're so easily able to stray off course, so to speak. And then to come back on course, it takes a lot of heavy lifting. So I think that if individuals can come to the conclusion that, hey, it may be a good idea that I write some stuff down and have some sort of course lined out, that way, if I do start straying off, I won't stray off too far, and it's easier to come back. And a lot of times, if you keep procrastinating on it by yourself, don't hesitate to ask somebody to help you, whether it's a spouse, family member, friend, or even hiring a professional. So I think that's a big thing, and that's something for people to consider.
Yeah, and I think a lot of people, when you think about it, you get a paycheck every 2 weeks, and you're like, well, I'm not overspending my budget, or what I'm getting paid, so I must be doing okay. Well, maybe delve into a little bit. It doesn't take long to go through your bills, and then also look at the things you're paying quarterly or semi-annually or annually. And really, if you think of a budget, it should be a 4-letter word, like a diet. But if I think of a health plan instead of a diet, I'm more positive. If I think of a spending plan instead of a budget, I'm more positive there, aren't I?
Yeah, you know what? That's a very good analogy. No, absolutely. And again, it's one of those things where people cannot be afraid to just ask for help, because let's face it, there's, whether it's this area or some other area that we procrastinate on or don't have a plan for, a lot of times, for individuals, it's just overwhelming, and we don't want to think about it. So play it safe, play it right. And if you feel you're overwhelmed or you don't have the knowledge, then don't be afraid to ask for help and get somebody involved to help you create that for yourself. So again, you're just not going through life kind of willy-nilly, and then at the last minute realize, oh my God, I wish I would have done this, or I wish I would have done that, or if only I had this information or this education, et cetera, et cetera.
So when you think about it, Rick and the team at Safeguard Investment Advisory Group have set up an opportunity for you to really kind of educate yourself about retirement and some of the challenges. And obviously we can think of the great things, the dreams, the bucket list things we've always dreamed of doing. If you want this information, The retirement guides, there's a webinar that Reed Aberdeen, Reed, Eddie, and Rick are all the partners at Safeguard Investment Advisor Group. Reed took the hour or so webinar that he does at appearances when they do a seminar, for example, and knocked it down to 30 minutes, kind of the nuts and bolts of what Safeguard could do for you. So if you would like that webinar, those retirement guides, all you have to do is text the word toolkit to 951-667-4969, and you get all of that. No cost, no obligation. It's really there for your information, your education, if you will. Text the word toolkit to 951-667-4961. Here's another bad habit for us, Rick, and that would be complacency. We don't make regular adjustments to our portfolio. We don't pay attention to the fees we're paying. We keep our money with some financial institutions just because we don't take the time to explore other options. I've changed my bank from one credit union to another because I was moving a car loan there. They had a better deal, and I said, I'm taking that deal. And they said, well, it'll be real easy to move. And I forgot about all the automatic payments that come out of my checking account. It was a little bit more complicated than they said. So we think some of these things are easy, but it's easier to just, streaming services. Hey, I haven't even used that one, but I still pay for it, for example. Maybe we need to look a little deeper into some of these things, right?
Yeah. In terms of what, now repeat that question again, Mark. I'm not
Complacency.
sure.
Complacency.
Oh, complacency.
Right.
Yes. No, totally. And I'm guilty of it myself. You just mentioned, I got a gym membership that I'm paying for every month that I'm not using I use a different gym now. And the old one, I just haven't had a chance to go in there, and I'm so busy with everything that I just put it off. But yeah, complacency is a killer. It goes back to what we were talking about before. You got to figure out what's important to you and create some foundational things that are key and important to you and your spouse or you as an individual, and decide, hey, let me, if retirement planning is important, hey, or let me sit down with somebody and have them help me execute a plan. And then once it's set up and it's automated to where you don't have to think about it, you have somebody there to help quarterback it for you. So that way you're not doing all the heavy lifting. In a sense, you can go back to a little bit of complacency because you have somebody there that's your coach, somebody there that's quarterbacking it all for you. And then they're keeping you up to date to make sure that you're on track. So this is definitely a direction that I would go when it comes to people that are, procrastinating, complacency, and all the rest of it.
Absolutely. So we don't want to be too complacent when it comes to taxes either. I mean, a lot of people don't realize, Rick, that there is a short window of opportunity to implement strategies to save on taxes. What can maybe the team at Safeguard Investment Advisor Group and Rick Rivera, what can you do to maybe help us make sure that taxes don't take too much of a bite out of our retirement savings?
Well, what we do is we actually sit down with an individual, figure out what their objectives are, and now we can educate you. We can look at your taxes and say, hey, listen, you know what? Here are some strategies you might be able to implement now to minimize taxes currently, which puts more money in your pocket now, which you can use either for savings towards retirement or to increase your budget every month. And then maybe there's some strategies that we can implement now to set you up so that way when you do retire, you might be able to save money or save taxes on Social Security, pensions, and all the rest of it, which will enhance what it is that you're currently doing. So again, the challenge is that if we're going to be complacent or we don't get the education, the problem is that people wait till it's too late to find out about some of these strategies. And again, some of the strategies that we talk about on the show, the earlier you implement them, the better off you're going to be, because the earlier we start it, the more leverage you're going to have later on. Now, we can always do it and implement it later on, but the earlier we start, the more enhancement it adds or more leverage it adds to the total portfolio, your total planning.
And that would certainly play into saving, to taxes, to really about every aspect of your retirement plan. And the earlier we start, the better.
And you know what? Nobody wants to give away unnecessary money to the government. A lot of my clients are like, hey, listen, Rick, you know what? I don't mind paying my fair share. I just don't want to be paying more than my fair share. So if there's some strategies that can be implemented that might help me minimize what I'm paying now, then I'd love to know about it. But the big thing, Mark, is this. most people, when they go to get their taxes done, it's already too late. April 15th, your tax preparer is reporting everything that happened last year. They can't change that. The strategies we're talking about, we have to be proactive moving forward. And that's where the true planning comes in.
Absolutely. If you'd like to take advantage of that, you can always call the team at Safeguard. It's 800-700-1980, Safeguard Investment Advisor Group. Tax planning is a big, big part of retirement planning today because of 401ks, IRAs. You haven't been taxed on that money yet. Hopefully you got some Roths in there. But 401ks and IRAs, the government was pretty smart. They don't want your seed money. They want the harvest money. So there are ways to maybe get around some of those taxes. And it's not get around. You're not breaking the law, right? You're going, okay, I'm going to move some of this, pay some taxes now. That's a really big part of what Rick and the team can help guide you with, is really that. I'm going to give you one more, Rick, before we wrap this segment up, and that's procrastination. That's a bad habit we really should all try to break. Have you ever had somebody say, hey, Rick, I've been listening to you for a while now, and I should have called you when I first thought about it, but now I'm finally getting around to it. We do tend to procrastinate.
All the time. And especially when it comes to topics like your investment planning, your retirement planning, your trust and will planning. When it comes to these topics, let's face it, it's not the most exciting topic in the world. And we get busy with work. We get busy with kids, the grandkids, the family. Everything else is more important, it seems like, than doing this. The challenge that I run into is when we procrastinate too much. And now when you're forced to come to the table and you're forced to plan and you find out that, you know what, I'm in trouble. And now you're stressing. That's the big issue that we run into.
So the idea is, hey, take an opportunity to talk with the team at Safeguard Investment Advisory Group. It's really never too early. And in most cases, it's never too late. There are things they certainly can't do for you later that they could do for you earlier. But the idea is, you got some questions, you quit procrastinating. Let's just chat with Rick and the team, find out where you are, and then see if you do need to make a tweak here or there. Earlier the better. 800-700-1980, complimentary, no cost to you, 800-700-1980. Glad you're with us today for the Big Picture Retirement Show with Rick Rivera of Safeguard Investment Advisory Group. Stay with us. We're back with more right after this.
You're listening to the Big Picture Retirement Show with Rick Rivera. For more information about Rick and the Safeguard Investment Advisory Group team, go to safeguardinvestment.com. While you're there, you can also download educational retirement guides and sign up for an upcoming seminar. That's safeguardinvestment.com. Now, back to the podcast.
Welcome back to the Big Picture Retirement Show with Rick Rivera of Safeguard Investment Advisory Group. Don't forget, if you would like that retirement toolkit, the retirement guides, the webinar that Reed put together for you, it's a 30-minute webinar, but the retirement guides will give you some insight into retirement. All you have to do is text the word toolkit to 951-667-4969. Text the word toolkit to 951-667-4969. The retirement guides, the webinar, all yours, no cost, no obligation. Text the word toolkit to 951-667-4969. I'm Mark Kelly. Glad you're with us today for the Big Picture Retirement Show. We're going to do a little mailbag segment. We've done some of this before. This is kind of fun because, Rick, basically your job is people ask you questions and you try to come up with some answers, right?
Yeah. All the time.
Yeah, absolutely. So people might email Rick. They might stop in the office, have a question. They might call. They might go to an event that the team has put on, and people ask questions. And we kind of hoard all these questions, and we save them, and every once in a while we'll do a mailbag show. So here you go. First question for you, Rick, comes from James in Corona. Rick, I've been retired for about 2 years now, and so far it's been disappointing. I wasn't expecting to feel this let down about this much free time, but that's how I feel. I'm thinking about part-time work, but I also don't like the idea of locking myself into a certain number of hours or a certain schedule. Do you ever hear other people struggling with this same thing?
Yeah, it's so funny. I just had a gentleman the other day, he's a client of mine, and he told me he's just going to work as long as he can because he's like, Rick, you know what? I get X amount of vacation time each and every year. And he's like, there's only so much golf and so much fishing and so much of this, that, and the other that I can do. And then he gets bored. So even if he does end up retiring, he may work part-time. But here's the thing that I do want to stress, because in this question, this gentleman, didn't tell me if he was retiring prior to full retirement age or if he's retiring after a full retirement age. And the reason why I say that is this. If you plan on retiring, let's just say you plan on retiring at 62 prior to full retirement age, where Social Security, maybe in your case, it's 65 or 67. Well, The one thing I want you to keep in mind that if you just want to work to keep busy, you have to realize that if you have W-2 income prior to full retirement age, that can have an effect on your Social Security, and they can actually take Social Security away from you. So you have to be careful of, that you don't want to go over a certain level of income. Now, once you are full retirement age, and if you decide to have a part-time job or work or whatever, then you can make $1 million a year. They can't take Social Security away from you, but they'll tax you on it. So worst case scenario, at most 85% of your Social Security will become subject to tax. So again, I would just be cautious that if you plan on retiring prior to full retirement age, and you're going to get a job, be careful of how much money you're making. And, there's other things that you can take up, maybe take up some hobbies or other things that you feel that, still keep you busy.
Yeah,
But that would be my answer to that.
Yeah, volunteer work. There's a lot of things you can do to I think give you some purpose in retirement. That's kind of what James seems to be struggling with when he's disappointed because he's got more free time. Then find something to motivate you. And maybe it is a part-time job, but maybe it's volunteering. There's a lot of things you can do. If you want to chat with the team at Safeguard, Rick sat down with a lot of people that are kind of in your same place. 800-700-1980 is the number, 800-700-1980. Next question, Rick, comes from Shelley in Norco. Rick, the idea of a big market drop makes me really uncomfortable now that I'm within a few years of retirement. Should I, and if so, how, should I start repositioning my assets?
Excellent question. And you know what? A big market drop, if something happens, you should be very concerned, especially now that you're just a few years away from retirement. So here's what I would say to you if you're a few years away from retirement. Again, you got to have a plan. So if you sit down with somebody and you create a plan for yourself in retirement, understand, hey, listen, how much income am I going to need? What are some of my objectives and all the rest of it? What you may want to consider is this: your 401k currently, you have certain investment choices within it. So some of you out there, if you're 59 and a half or older, so let's just say you're a few years away from retirement, let's say you're 62 and you plan on retiring at 65, you do have the option of transferring a portion of that 401k or a big portion of it, whatever your situation is, to a traditional IRA and start allocating those investments in a way that's going to set you up for retirement. So that way, if there's a big market drop between now and your retirement date, you're not in a situation where you need to panic, because what you did is you prepared for it. You have everything already lined up, set up, geared for retirement. So the big example I can give you is think about those in 2007. Some people in 2007, they were heavily invested in the market. And again, it's not their fault. It's not your fault. Your 401k only gives you a limited amount of choices. And, they retired. 2008, the market corrects. Or maybe they were thinking about retiring. 2008, the market corrects. And now they're like, okay, I got to hang in here a few more years to see what's going to happen before I can actually retire. So I think sitting down with a professional, creating a game plan, and then deciding, does it make sense to maybe adjust the portfolio within the 401k, or does it make sense for us to take some of the money out of the 401k and go into a traditional IRA where we can get some more, where we can implement some different strategies that the 401k doesn't offer?
Yeah, I really think the idea that you brought up about the fact that once you typically hit the age of 59 and a half, you're not going to retire till you're 65. So that's 5.5 years of working until you retire. But you do have the opportunity. Most companies will allow you to roll some or most of that 401k into an IRA. You're not sending the check to yourself. It's going custodian to custodian, so there's no taxes. Rick and the team can help guide you with that. So, Shelley, again, that number is 800-700-1980. This could be really a big thing for a lot of people where you have a little bit more control over that cash flow. 800-700-1980. All right, next question comes from Richard in Ontario. Rick, how many life insurance policies is an acceptable amount? It's a debate in my family. I feel like my mom could be overdoing it with the number of little policies she has. Remember the old door-to-door salespeople that go, hey, here's a $1,000 life insurance policy. Here's that used to happen, didn't it?
Oh, yeah, absolutely. And I see a lot of these people with these $1,000 policies actually are just accidental insurance. So the only way they can pay out is if there's an actual accident. If they die of natural causes, it doesn't even pay out. So, yeah, I see it all the time where some people are actually overinsured. When it comes to life insurance, it's one of those things. I think like earlier on in our careers, when we have kids, little kids and all the rest of it, and if God forbid something happens to the breadwinner, we want to make sure that, we're not leaving the family, in the cold, so to speak. And, because we got kids that are, going to be going to college and all the rest of it. But as we get into retirement years, if we did our planning right, maybe the home is paid off. We really don't have a lot of debt. Pension and income are secure. The kids are out of the house. They're fine and dandy. And as long as we don't have an estate tax issue, really the life insurance is really not necessary. So especially if you're paying a premium every month for it, it's a situation where why not, you use that money for something else, enjoy your retirement more or whatever, because the kids don't need it. Now, if it's a situation where the kids do need it, or maybe you have a special needs situation, or you have an estate tax issue, well, then of course that can change the game. But many times with the clients that we deal with, once you've won the comfortable retirement and the kids are out of the house, the life insurance is really not needed.
So, Richard, you could always bring your mom in and talk with Rick and the team at Safeguard, 800-700-1980. Final question, just a minute and a half or two left. I'm really struggling to get organized with my finances. Now, this comes from Jane in Upland. I'm really struggling to get organized with my finances, Rick. We have money saved, but I just keep letting all this paperwork pile up. Could you help me sort through everything I have, or would I need to get it all put together before I come in and talk to you for the first time?
Actually, when you come in for the first time, you don't necessarily need to bring in a whole bunch of things. We can give you a list of things to bring in, and we don't want you to kill yourself. So a lot of the questions and things that I would be asking you would be right off the top of your head. So we make it very easy. And then if down the road, like if we decide, hey, listen, you know what, we need some additional information, then of course we can help you, gather that and let you know what we really would need and what not need. But for the first meeting, I can guarantee you that most of the information that we would need would really be off the top of your head.
So we appreciate the questions, and we understand. I mean, the working years, the retirement years, accumulation phase to distribution phase, 401ks, boy, I don't have a pension. Boy, I do have a pension. Maybe I'm a little better off. I don't know. There's so many moving parts. Everybody's situation is unique to them, and that's how Rick and the team look at it. Maybe you do need life insurance. Maybe that's a key for if you pass away, you can pay the house off and help the spouse move on because you don't have a pension or something. There's a lot of moving parts here. There's a lot of worlds to think about. Rick and the team can help you in the market world, the stock market world. They can help you in the insurance world, but they have no idea what you need until you give them a call. 800-700-1980, 800-700-1980. I say it all the time. I think it's one of the more important phone calls you can make. We're talking about the next 20, 30 years of your life. 800-700-1980. Rick, enjoyed it. Always a lot of great information you give us, so enjoy the rest of the weekend. You've earned it. We'll do it again next week.
Thank you so much, Mark. Really appreciate it.
Firm offers insurance services. Safeguard Investment Advisory Group, LLC is a registered investment advisory firm. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Safeguard Investment Advisory Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Safeguard Investment Advisory Group, LLC. This radio show is a paid placement.